Keeping Realtor, and today, in honor of all of our senior content that we are doing this month, I have a very special guest, Angela. How do you pronounce your last name?
Why cough when you can sneeze?
Perfect. And
You'll never
so
forget it.
that is one way to keep it memorable. So basically, you are, as far as I'm concerned, the reverse mortgage expert in Ventura County. I mean, what areas do you serve?
We actually serve 24 states. So I can do California statewide, Montana, Idaho, Oregon, Washington, Texas, Florida, Georgia, Alabama. I could go on.
And so a lot of people, when they say, they serve a lot of states, they become concerned about like how local someone is. Do you feel like you can still take care of all of those states just fine?
Yeah, actually, it's pretty smooth, especially when COVID switched everybody to, virtual. It's become a lot more easier for my business because I do radio shows and podcasts and I still serve clients and I find a way to get it all done.
Perfect. So, when we're talking about financing and seniors, my understanding is that for the most part, reverse mortgage is kind of the main tool that seniors have that others don't. It's not to say that we don't have FHA and other stuff, right? But I mean, this is really the go-to tool that is special to seniors. Is that correct?
Correct. It does come with a minimum age. So there are products that start as young as age 55 and then more access to products by age 62 plus.
Perfect. So rather than asking you a bunch of questions that you can probably answer with your presentation, how about we just take a look at the presentation?
Okay, great. So today I wanted to present to you how to use a reverse mortgage to purchase a right-sized home. I'm going to go through the slides here and why people consider selling to buy a new home. Most seniors are motivated to move for several reasons. Downsizing from a larger home. Do you have a 2-story property and bad knees? These are things you want to think about. Right size to a single story that better fits their needs, warmer climate, closer to family, cost of living, lower taxes. And here is a representation of about where a third of baby boomers are currently moving. So Idaho, Utah, Arizona, Texas, Florida, North Carolina, Virginia, and Hawaii. Of course, who wouldn't want to move to Hawaii? So I wanted to give you a couple of case studies. So we've got Sue here, and she moved to a single story, or she wanted to be closer to her grandkids. Either one works. And she sells her home in Northern California for $900,000. She didn't owe any other liens on the property. A lot of seniors do sit on a free and clear property, and then they're concerned about moving because they don't want to start fresh with a new mortgage. So she purchases a 1-story in Southern California to be closer to family. She buys it for $450,000, but she only uses $300,000 of the proceeds that she received. So she created a retirement account from the remaining cash of $550,000 after, closing costs and expected, I'm sorry. I have somebody coming in, so I'm like, a little distracted, but moving expenses, etc. So she needed to downsize. She went from 0 in her retirement to $550,000 in her account. Plus, she's closer to family in a home that doesn't require a monthly payment. So she bought a $450,000 home and did not have to use all of her proceeds to do it. She only used $300,000 based off her age. And then she gets to live there for as long as she lives there without any required mortgage payment. Now, you're more than welcome to make mortgage payments. You're in charge. So you can decide how quickly the interest accrues or whether it accrues or not. Some people treat it like an interest-only loan and make monthly payments.
Okay, hold on 1 second.
So
I'm
reverse
buttons to make this work, and I broke it. There it goes. Okay, I was trying to get us out of the way.
Okay.
All right, you're good.
No worries. We're good?
We're good.
Okay, so reverse purchase strategies and scenarios. It offers so much more flexibility. You can buy a home that's best suited for you now. You can sell and buy 2 homes instead. Buy a second home or investment property, work with a builder, consider a new construction, create liquidity for other investments, relocating to be closer to family, and move on confidently from a gray divorce. Sometimes people need to split up a property and maybe need to buy 2 houses instead. And the reverse mortgage is required to be a primary residence. So that's very important to understand, that if you're going through a gray divorce and you need to essentially split the proceeds and buy 2 separate properties, they both need to be primary residences.
So what is a gray divorce?
A gray divorce is, people divorcing after many, many, many years of marriage and when they're in their, senior years.
Got it.
So additional benefits of a reverse mortgage. Your FICO score does not matter. Limited or fixed income is okay. A lot of people don't think that they would qualify, and most of my clients have just Social Security for their monthly income. I've also done this for a couple who had a 0 FICO. They had no FICO at all because they paid everything cash for the last 20 years. They didn't have a car payment or a credit card or anything. They had a 0 FICO, and I was actually able to convert their equity into $1,500 a month payments to them. Of course, this wasn't a purchase. It was a home that they already owned. But there's just so many ways to tailor this to your needs. It's always worth a conversation. Okay, so common myths of a reverse mortgage. The lender will own your home. I hear that so many times. You retain full ownership to the property, just like any other mortgage. The bank never owns your home. It's so important to understand that. The reverse mortgage requires monthly payments. So wrong, there's never any required monthly mortgage payment. And if you decide, oh, you know what, I got a tax refund and I want to put that towards my reverse mortgage to kind of pay down the interest a little, you can make a one-time lump sum payment of $1,800 and then never again. You're not going to get phone calls saying, hey, you made a payment. What happened? Why am I not getting any more payments? When's your next payment going to be due? Nobody cares. It's your freedom and flexibility on how you want the reverse mortgage to work for you. You do have to maintain your property taxes, hazard insurance, HOA, or any other property fees, and you also have to maintain the property itself, so it can't get condemned, and again, it must be a primary residence. So the reverse mortgage must be paid back after 30 years or when the borrower turns 100. Not true. So reverse mortgages actually go to age 150. Now, most times when I'm doing a presentation, the grid that shows the outline of how the reverse mortgage works stops at age 100. But it definitely goes on to age 150. So if anyone wants to break any records, I'll be right here cheering you on. So the most common myths, another myth 4, is to qualify for the house, you have to be debt-free and paid off free and clear mortgage. And it's funny because I actually laugh a little bit because I went to my CPA and he was all like, oh yeah, I had this client and I thought a reverse mortgage would be great for him, but he's paid off his mortgage. And I said, well, that's great because he can now leverage that equity. So just know that if you do have a free and clear property, you can leverage the equity in your home. Most people use it as a line of credit for a rainy day fund, which typically doubles after 10 years of not using it. So it's not required to use the line of credit, but it's definitely helpful to have it, especially for the rainy days. Myth number 5, there'll be nothing for the heirs. The reverse takes all of the equity. So that's false. They inherit the home as usual, and they need to pay off the mortgage just like any other mortgage, and whatever proceeds are left are the heirs to keep. With a reverse mortgage, they can't ever sell or refinance. That is not true. You are in charge. You can sell your home at any time. The reverse mortgage will be paid off at closing, and then there's no prepayment penalty for paying off or selling the home in advance. But, the reverse mortgage was essentially built for you to stay in your home for the rest of your life. So if you want to sell and you need to go to a facility or what have you, you are in control. You have that option to do it. So why do a reverse mortgage versus a conventional style loan? Well, number one, there's 0 years of monthly mortgage payments that are required. You do have a higher down payment though. Number two, you can look to improve your cash flow. It increases your liquidity. You can ready to improve and enjoy your retirement. You still own your home and you pay your taxes and insurance. Now, a conventional mortgage has 15 to 30 years of required monthly down payments. It does have a lower down payment, but it does increase your equity, but it's for the people that are still working, because typically as you age, your income does not increase. So that's where the reverse mortgage and the not requiring the mortgage payments comes in super handy. And again, with the conventional versus reverse, you still own the home and you must pay the property taxes and insurance.
So I feel like this is kind of like step two. If we were to step back for just a second, talk about like someone that has no idea what the heck a reverse mortgage is. What is it in the most elementary, easy level, basic level here?
Basic level, it's a way to access your equity without giving up your home. So for instance, let's say you have a free and clear property and it's worth $800,000. Mm-hmm. Let's say you are 72 years old. The lender is going to give you access to a portion of that equity based off your age and life expectancy. Using round numbers, and I haven't validated these, but let's say it's 300,000 in this particular case. So you can take 300,000 and you could choose to receive a monthly payment, and they'll divide it up and you'll get a monthly payment for the rest of your life. You could open it up as a line of credit and let it sit there and grow so that when you do need it, there's more funds available for you. Or you can take the cash in a lump sum and put it in an investment or buy another property. They just give you a portion of the equity so that you can, essentially live the rest of your life in the best years of your life without worry or, complications. Did that answer your question?
So basically for everyone else, at least if I have this right, it's a way to have more money in your retirement years by using your home's equity instead of possibly having to sell or, all the other stuff that you might have to do to put some funds together.
Exactly. I've had people where, I actually have someone I'm helping in Texas. She gets $800 a month in Social Security. Mm-hmm. That's it. She's sitting on a free and clear property, and I'm going to be able to get her $600 a month in payments to help that. That's life-changing money. So, please definitely have that conversation, especially if you're thinking, maybe I need to move, and what's the motivation? Is it truly because the home isn't suited for you? Or if it's because you have concerns about, liquidity or what have you.
And so in the same way that most seniors at some point consider downsizing, maybe not all, but, at some point everyone I think at least considers it. This is another way to consider downsizing, but also staying in place and not making any real significant crazy sacrifices to do that.
Correct. And let's say you need to make ADA improvements to your home because you have bad knees and maybe you can't lift your leg over the tub, and you need to make a change and you need to upgrade to, a walk-in shower or what have you. You can use funds from the reverse mortgage to make those improvements to your home. And I think Brian has a way to make those happen as well. And using your home's equity, you don't have to get a HELOC, which requires monthly payments, which has a 20-year amortization after the first 10 years. So again, as I mentioned, your income typically doesn't get higher as you age. So using the equity in your home to make those improvements to stay and or purchase a right-sized property is always a good thing.
So anyways, hate to interrupt, but you can go back to what we had going on here. I just wanted to make sure, because I wasn't sure if it was super clear to the folks at home exactly what we're talking about or why this is so useful,
No, I appreciate that. I appreciate that for sure. So more reasons to use a reverse for purchase. There's safeguards in place. There's counseling. Sometimes there's 2 appraisals required if you're getting a higher valued home. They are non-recourse loans. So oftentimes I get people concerned because sometimes the balance can exceed the value of the property. And they think, oh, I'm going to leave my heirs with all of this debt. And that's not true. These loans are non-recourse, and most of them have a mortgage insurance premium that you pay up front that's about 2% of the present day value. So let's say for a $1 million property, it's $20,000. Let's say your property, value doesn't appreciate, along with your balance as it might normally do. And let's say your balance considerably more than the value at the time of sale. Well, the lender can only recoup what the value is of the property at the time of sale. So if let's say that $1 million home only appreciated to 1.2 million, but your balance is 1.6 million, no one's going to get a bill for $400,000 because you paid a $20,000 insurance policy up front. Most of them are FHA insured. And it enables you, the homeowners, 55 plus, to purchase at a fraction of the purchase price and avoid depleting your reserves. There's no monthly mortgage payment required. It preserves capital and liquidity. There's no prepayment penalty. You can refinance or sell at any time. We do talk about how long you intend to stay in your property. So for instance, if you're going to move to another climate or what have you, and you're thinking, oh, well, I'm going to stay there for 3 to 5 years, and then I'm going to go move and be next to another relative, a reverse mortgage might not be the best choice for you, because the longer that you keep it, the more cost effective it is. So these are conversations that I like to have and say, okay, what's your plans? And then, of course, non-recourse, the heirs will never owe more than the property is worth. So worst case, your heirs, it'll be a wash to your heirs. So they won't owe anything, but they also won't gain anything as well. But when we have our initial consultation, you will know that up front. So FHA insurance, there's 2 FHA insurances with a reverse mortgage. There's a one-time upfront, which is 2% of the market value. And then there's a 0.5% per month. And this insurance that's collected allows the program to exist. It allows for lower interest rate, and the home is the only collateral. It protects the homeowner for however long they want to live in the home. So life expectancy tables that they're using are like from 1947, and people are living a lot longer now. So, technically most borrowers are in a winning position versus the lender. Hope that doesn't change anytime soon, knock on wood. And it protects the terms of the loan, and there's no liability to the heirs or the estate for any deficiency.
So then, out of curiosity, what would happen if someone decided they want to move?
They sell the property. And here's the other thing. The heirs can purchase the property for 95% of market value. So if we go back to that person that had a $1.2 million property, but their balance was 1.6, if they sell it to an heir, they get to buy it for 95% of the 1.2, regardless of what the balance is.
Got it. So big thing here is the points you're not stuck, right? Like even though you have this going on, you're free to move if it's time.
Correct. You are free to move, like I said, sell or refinance at any time. You are in control. So how do you qualify for these? What's the eligibility requirements? So at least one homeowner needs to be 55 plus years of age. They need about 50% for the down payment. In some cases, if you're younger, it could be closer to 60. Let's have that conversation, and that's affected by the age. Owner occupied for the life of the loan. So let's say there's a married couple and one needs to go into an assisted living facility. The remaining spouse can live in the property for as long as they live in the property. Once the final spouse leaves, either vertically or horizontally, the loan becomes due. So either the property is sold and the lender is paid off, or they sell it to an heir because there's nobody left yet, or there's nobody left in the home. And then you can do 1 to 4 units. So if you want an income producing property, you will have no
That sounds
required
weird to
mortgage
me.
payments. I know, right? It's amazing. It's amazing. They do have to live in the more desirable unit, though. So it's not like they can buy a fourplex and live in the tiniest one in the back. They do have to live in the most desirable unit, and then they can receive rents
Senior
for
house
the
hacking.
other units. Right? There's no manufactured homes on a purchase. Some condos will qualify. They either have to be FHA approved, or we would look at a proprietary product from the lender that doesn't require the FHA approval. And loan amounts up to $4 million. I had a client who owned an $11 million property, and they were actually had enough equity in there, or it was free and clear, and we were able to get him a $4 million loan. So, I mean, possibilities are endless. And you must account for all spouses. So if you are in a situation where you have a spouse that doesn't live in the home, we still have to account for them too. It's a non-borrowing spouse, and that does impact the amount of the equity.
So I'm not sure if I'm getting ahead of myself here, but are there any restrictions on what you can do with the money?
No, and that's the beauty of it. So I have people who come to me because they cannot get long-term care insurance because they have a, pre-existing condition or what have you. So they take out a reverse line of credit to help pay for their long-term care policy. I had one gentleman whose wife had a $1,500 a month $1,000 a month. She had Parkinson's, and I was able to convert their equity into $1,500 a month payments.
Perfect.
To help offset that. Or, again, if you don't qualify for the long-term care policy, you can use it for that. You can use it to travel, anything. Nobody's going to get a tally of what you're using it for. You can take that money, go to the movies
then. Do something fun. Perfect.
Right? Have a steak dinner. So, when do you pay back the loan? The last borrower or eligible non-borrowing spouse passes away, moves out of the home permanently, the home is sold. If the borrower defaults on their property taxes, homeowners insurance, HOA, or other property charges, that does call the property due, and the home is not maintained. So if the city comes and condemns your property, that's a problem. So you do have to maintain it. You can't, let it go to heck in a handbasket. So just be cognizant of that, because you're not hearing those news stories anymore of the, homeless widow because of a reverse mortgage. It was so bad. Well, there's so many safeguards in place now, and we don't always know the whole story. If they forgot to pay their property taxes and ignored all the notices, it could still happen. So you got to be in contact with your loan officer. I put an annual reminder on my calendar so that I can remind them of the occupancy cert that's going to come in the mail. And then, of course, if they haven't accounted for taxes and insurance through the loan, I set reminders for those too, because I want to make sure that, there's no mishaps or, that you have any reason.
So as long as we're talking about safeguards, is that going to come up later here in this, or can we talk about it now?
Let's see here. That's a good question. I've got a couple more
It's
slides,
up to you. I don't
but we can talk about them.
But I mean, if we're talking about safeguards,
it's okay.
I would like to, maybe I'm more pessimistic than most, but I think that most people do have those memories of back in the day when grandma, grandpa lost their house and all kinds of stuff happened. So like, what safeguards are in place to protect seniors from potential frauds, scams, and everything else that used to be associated with reverse mortgage?
That's an amazing question. So in the last 15 years, the safeguards that have been put in place are a mandatory counseling. So you have to speak to a counselor, and the counselor talks to you about the loan itself. They make sure nobody's coercing you into it, twisting your arm, that you actually have the cognitive skills to understand what you're signing up for. So there's that protection in place. There's protections for non-borrowing spouses, because what happened in the past is the lender used to give equity based off the oldest borrower. And then the youngest borrower, when the oldest borrower passed, the youngest borrower didn't have any claim to the property. And that's why they became the homeless widow, because they kept her off the loan to take more access to the funds because of the older spouse. The other safeguard is the appraisal. Of course, the disinterested third party goes out there that's hired by the lender. They make sure there's no health and safety issues. Now, if you do have concerns about health and safety issues, we can still have a conversation because, again, as I mentioned, there are some repairs that can be done through the loan without you having to shell out some cash to do it. And then let's see here, the purchase, doing a HECM for purchase came out. And then the other thing was, again, they gave too much equity to the borrower. There's an income test now. They want to make sure that you can maintain your property taxes, hazard insurance, HOA, etc. So there was no income test before. And so they would give a loan to someone with a high, give them more of their equity. And then they weren't able to maintain their property taxes and insurance. So then the home became default.
So it sounds to me like as long as, you go through the process, you're pretty safe and it's hard to mess it up too much.
It's hard to mess it up. So, but I do put, like I said, I put those reminders on there just in case. My mother-in-law, I actually did a reverse mortgage for her, and then I get the, vice versa. Well, you did it for your mother-in-law. Is that a good or a bad? Well, it's good. So we put one in place for her that has a line of credit so that when she needs care, it's available to her. I also set it up to cover the taxes and insurance because she can be forgetful or she could be stubborn. Sorry, Mom. And say, well, they don't need my money right now. And, I don't want to cause a default event. So I did set it up so that it did collect for that.
And then you mentioned a couple times now about like age differences between spouses. Out of just curiosity, what if you have a, sugar daddy situation where someone's far apart? Is there a range that you have to, your spouse is in their 20s and now you don't qualify?
So some products, it depends on the product. And if they qualify for that particular product, their spouse can be younger than 55. The caveat is that typically the loan is based off of the younger spouse. Well, if you have a 20-year-old spouse, then the access to equity might not be as much, right? So there are caveats in place, but there's no discrimination on who you marry and what age they are.
Okay. Are you going to be going into products here too?
I'm going to go into the process here next.
Okay.
And then of course we can talk about that if it's not on one of my slides.
Yeah. Let's keep going then.
Okay. So here's the process. You get an accepted offer, you sign your FHA amendatory clause, and your real estate certification is dated with the contract date. You can't date it after. There's the contingency for the home inspection, much like if you were doing a normal forward loan. You have the lead-based paint disclosure, etc. The language indicates the seller is responsible for completing paying repairs, etc. before closing. Other real estate owned addendum. We definitely need to know if you have other properties. Seller concessions and incentives. Down payment assistance from any interested party is not permitted. So if you're trying to get seller credits, the best thing to do is just negotiate a lower sales price. And that's something Brian could help you out with. The seller can pay costs that are common and customary for the seller, like the realtor commissions, transfer tax, HOA fees. The contract must state that there has been no value given to non-real property like refrigerator, window treatments, etc., or the built-in barbecue in the back or what have you. Okay, so here's another example. Sam and June, they wanted a reverse refinance to help with medical bills, and Sam was diagnosed with a heart condition. He couldn't climb their stairs any longer. So I recognized that the property was not a good fit for them and brought up the reverse for purchase option. The home was worth $800,000 and they had a $300,000 mortgage on the property already. So they netted about $450,000 from the sale of the property, and they were able to buy a single story. They put $400,000 down, but they kept $50,000. And they were able to buy in their same neighborhood. So for an $800,000 purchase price. So it's really such an amazing tool. I would highly, highly, highly recommend taking full advantage of this if you can. So here's an example of what an amortization schedule looks like. And as you can see, this particular one has a $800,000 property. This is actually Sam and June. And they brought in 400,000 plus closing costs, so 439 total. And then you can see here that the equity in the property in the final column remains pretty steady, because remember, you're bringing in about 50% of the value of the property. So you got a good amount of equity here, no matter what, assuming a 4% appreciation. The loan balance does get to $1.6 million at age 99, but they're also anticipating that the property would be worth 2.1. However, let's say that your property doesn't appreciate as generously as this chart shows. Let's say it never exceeds the $1 million mark. And then by age 99, both Sam and June are gone from the home. That 1.6 versus the $1 million, nobody's going to get a bill for that $600,000 deficit. It will be a wash to the heirs. So that's very important to know, that nobody has to pay anything to sell the home. You might as well let the bank do it, because there's no profit left in it for the heirs.
So using the same example, the last several years, we've had just crazy appreciation, right? It's like 20% and like
18 to 22%. Right? Yep.
So when it goes up a lot more than 4%, does that give them more cash available, or does that?
Yes. So the longer you maintain the property, so let's say, for instance, let's say Sam and June took that extra $50,000 and put it in the line of credit. Mm-hmm. So as they age, they actually get access to more of the equity. And we don't want that, or the lenders don't want you to refinance when the values increase. That's why they automatically give you access to additional equity throughout the loan. It's almost like if you had a credit card and you called and said, hey, I want to increase my credit limit. Mm-hmm. Except the reverse mortgage does that automatically.
Okay, perfect.
Excuse me. Okay. So, helping you live your best life, financial freedom, next exit. Give me a call. Feel free to reach out. I am at 805-301-1933. You can send me an email, angela@reverseloansolutions.com. I also have a website, ilovereverse.com. And you can go there and watch various blogs, look up FAQs, etc. So I'm happy to answer any questions. What was the other section you wanted to talk about?
Well, I got a couple things we'll talk about here in a minute, but so first of all, for anyone watching, we got a couple folks watching right now. If you have questions, put them in, the comments on the side, and we'll ask them now. But in the meantime, I'm going to go through mine, if that's cool. So,
Sure.
Are there multiple types of products? What types of products are generally available?
Yeah, so there are fixed products available, and the fixed products only allow cash to the borrower. So they'll give a certain portion, but then that's it. I call them one and done. So you get a lump sum cash and that's it. Mm-hmm. The problem with those is that typically somebody will call an 800 number. They get an unlicensed representative who hasn't been trained to do anything but maximize company profits. Mm-hmm. So what I do is I actually look at the senior situation. I ask important questions. I might get a little personal, but that's okay, because I want to structure this to fit you for the rest of your life, not just a one-time lump sum. Mm-hmm. Let's be honest, not everybody's responsible with money. And if you get $200,000-$300,000, and somebody goes to Vegas thinking they're going to double it, that could be a problem. So we talk about your needs. If you think there's an income gap, if you want to use the line of credit as a rainy day fund, it's just an amazing tool. So you could do a combination of all three of those, but we just have that conversation and we say, okay, you know what, you've got Social Security coming in. Is that enough each month? Do you have a deficit? I had a gentleman who lost his wife to cancer, and just as COVID started, so he had to mourn in, solitude. And he came to me because his mortgage payment was $2,250, mm-hmm. but his Social Security was only $2,200. So he had a deficit every month. He had to choose, like, do I buy food, gas? What do I do? Right. Because, I don't have enough money each month. So I was able to do a reverse mortgage, get rid of his monthly mortgage payment. And now he called me the other day. He's like, I'm going golfing now. He wanted to golf.
I can eat again.
Right. That too. He was able to, not worry about, missing out on his car payment or what have you. And he was just robbing Peter to pay Paul all the time.
Right.
I even got his home fixed through the process and another $70,000 at closing. So
awesome.
Yeah, it's just such a powerful retirement tool. Don't ever sit in silence or suffer in silence.
Right.
Always just reach out and I'll be happy to, go over any particular scenario.
So are there different ways that like the disbursement of the funds can be done?
Yeah. So for instance, if we set up monthly payments, it'll just automatically come to you each month like your Social Security. Let's say you don't need as much payments as it allows. So for instance, I had a client that was able to get $1,600 a month, but she only needed $600. So we let that $1,000 be in a line of credit, and it was actually a lump sum. So it was like $50,000. Let's say it's $50,000. So it stays in that line of credit, and then she can draw as needed. So, and then in 10 years, let's say she forgets about it on purpose, right? Because, we like to do that because if we know it's there, we're going to use it. So you forget about it on purpose. In 10 years, now it's $100,000. So, there's no banks that are going to give you that kind of return on your money, and you might as well take advantage. People are concerned about the high rates. Well, that's what it does. It doubles your money in 10 years. Right. So take advantage of those high rates while the values are still high, and you got a perfect storm there.
And then, you're talking about how much these homes are worth. Who decides that? How do they determine the value?
So there is a disinterested third party that is hired by the lender, an appraiser that goes out to the property.
Not Zillow, huh?
And determines, I'm sorry?
Not Zillow, huh?
Nope, not Zillow. Yeah, sometimes people go, oh, my property's worth X, and, we'll wait and see what the appraisal determines. And then there's been times where I've done a whole presentation for the client, and their property is either more or less, and that impacts the numbers exponentially. So it's not a 1-to-1 ratio. It's not that I was set up to get 100,000 at closing or what have you, and now I'm only getting, because the value came in 50,000 short, I'm only getting 50,000. No, it's exponential. It's not necessarily 1-to-1.
Okay. And I mean, of course, we're talking about all of the benefits and all the money you can get. What kind of fees are associated?
Okay, so as mentioned, if you're using an FHA insured product, there is 2% of the 2% of the value is collected upfront in the form of a mortgage insurance. That is financed. Okay. So are all the closing costs. So if there's an origination fee, either to the lender or our brokerage, the credit report, whatever, the only two upfront out-of-pocket costs are for your counseling, which typically runs about $200, and then for the appraisal, which varies depending on where you're located and the value of the property. Could be $550, it could be $1,250, depending.
Out here, it's around
if you're getting a duplex or what have you.
Out here, it's around $600 or $700 usually, I think.
It could be, but if you're looking at a higher valued home, then it could be more too. So those are the only upfront out-of-pocket costs, and then any title and escrow fees are also financed. So depending on the value of the home, you've got that 2%. But again, it's so valuable because it allows you to live in the property without worry that your heirs are going to get a bill if the property, if the balance ever exceeds the property value.
Perfect. So, everyone's financial situation is different. There's tons of different things that can happen. Are there any alternatives that you recommend for seniors, and any alternatives that you might recommend if they have specific situations going on?
So I always talk to people. I have a list of questions that I ask. I ask about the home. I ask if there's any deficiencies on, federal debt or student loans. if you're sitting in a 2-story property on a 5-acre lot of land, that might not be suited for you when you're 90 years old.
Mhm.
So, we just have these conversations up front, and then from there, I talk about your pain points. Are you worried about cash flow? Are you worried about your heirs? Because there are cases where the heirs actually will benefit greatly from the reverse mortgage as well.
Yeah, that's one of the biggest things that I run into as well is, people are like, well, what if, what if, what if? And it's like, at a certain point, we just have to talk. As much as I'd love to give
Yeah.
everyone their answer on video, if you do have something that specific, let's figure it out because it's too much to go over in one video.
Well, right. And the fact that no 2 reverse mortgages are
Mhm.
alike. Each one is customized and tailored to each individual. Something that I can give a 72-year-old is going to be different from an 82-year-old. And if somebody owes, a mortgage on it now versus a free and clear, so there's just too many, variables that you can't say a blanket statement because it's not going to fit everyone.
Right. And then, like, in terms of our local community here, because most of the people that watch me are Ventura County, maybe like, West LA County. When we're looking at senior communities, one of the things that you said was that not all condo complexes qualify. I
Correct.
think, as far as I know, I'm pretty sure Hueneme Bay, Leisure Village, and all the other ones I can think of qualify. So I don't think that's something that they should have to worry about out here much, right?
Not necessarily, but again, we handle 24 states, so there are times where
Right.
there are programs that don't require it either. And yes, Hueneme Bay, that's where my mother-in-law lives, and it is FHA approved. I can confirm that.
Yeah, and then also to clarify too, because earlier you said that it doesn't work for manufactured homes, and that is a very significant portion of our homes out here. So again, one of the things I run into with seniors is I really do prefer to get people into condos or houses. I'm not a big fan of the manufactured homes myself because it limits their financing, and I mean they have big HOA fees, all that kind of stuff. Do you kind of feel the same
Yeah, the
way?
land lease, and that's why the lenders don't want to touch it,
Right.
because that land lease can go up and up and up. My mother lives in
Mhm.
Camarillo, and her land lease went from like $800 to like $1,200, and when we're doing an income test, we can't account for
Right.
that. So that's one of the reasons that the lenders don't like either manufactured or mobile homes. Now, if you do own the land, there could be exceptions. Like if you're living in Fresno and it was dropped there from the beginning
Mhm.
and has a permanent foundation, that's different.
They're
But
complicated
definitely
though.
not any of
I
the
hate to like tell people that it
mobile
might be
homes.
different because then it's over a certain age, or I mean,
Yeah,
there's so
yeah,
many
yeah,
things. Can't find the foundation
for sure.
cert.
Right.
So, how do you keep up to date on all of this? And, how often does it change?
So it doesn't change often,
Mhm.
fortunately, although the lenders do fluctuate on the limits that they allow. And I have, I'm constantly doing lender trainings, keeping up to date with that. And the software that we use is super powerful and it's updated with all the latest and greatest. So, when I have that conversation, as the principal limit, which is the name for the amount that the lender is willing to lend against the property, as those change, like if you're in, for instance, I have a client that, due to his um, lack of urgency, has um, delayed the loan a bit,
Mhm.
and he was going to get 300,000, but now he's going to get closer to like 150 because the lender changed the limits.
Mhm.
So if you want to do a reverse mortgage, definitely being proactive, and there's not many things that need to be done now. In his particular situation, he had a trust and he had uninstalled solar, and there's always something.
Mhm.
So if you're ready to go, I can let you know the needs list, and then we could talk about anything that might cause a delay. But, typically these can close within 30 to 45 days. But in the state of California, we have a 7-day cooling off period after your counseling has been completed. So that's very important, because if you're going to do a purchase, you don't want to set it for a 21-day close or a 30-day close. because that waiting period.
Right.
So that's going to eat into your escrow. So you want to try and go for a 45-day instead.
And I do know that some people get kind of discouraged by a 45-day close with this crazy market. But again, keep in mind when you're doing these different programs, there's pluses and minuses, right? A lot of people, in the grand scheme of things, 2 weeks isn't that big of a deal. And sometimes we might have to sweeten the pot and offer just a little bit more money. But think about how good your financial situation will be once you're in
I
it,
know.
right?
No required mortgage payments.
Exactly.
It's like winning the lottery.
Right. And so, on your website, I know you've got stuff. Is there any big shout outs for things you're giving out? Again, for me, senior month, right? So how's it going to work? Green screen's not cooperating. I got our new moving on thing from the senior, basically from the senior accreditation for real estate, right? So what kind of cool, do you have any cool stuff, toys, shout outs to put out there?
Yeah, so I have links to the do not call list, the opt out pre-screen.
Mhm.
So all those scam calls, you can help avoid that by going to ilovereverse.com and looking at those. There are great handouts in there. HECM versus HELOC. If you're thinking of getting a HELOC against your property, might want to consider a HECM instead because there's no required monthly mortgage payments. And there's a lot of great information on there and different ways you can use that money because again, nobody's going to take a tally of, oh, now he bought a Corvette, now he did this. And you know what? It's your retirement. You need to live it the best way you want. So just know you have freedom and flexibility with that. But yeah, there's a lot of great handouts, FAQs, informational websites, what to do when a spouse passes, from Social Security. So there's a lot of great information on there.
So I think that's about all the questions we have for now. Do you have anything you want to add before we wrap up here?
Just because the reverse mortgage is so unique, you just need to, have that conversation. Ask me the hard questions. I'm more than happy to say, there's been times where I'm like, gosh, you know what? A reverse mortgage is not the best fit. So I'm not just going to do it to, try and make some money. I want to do it because it's actually suited for your needs. So just know that my intentions are always in the right place. I want to make that money last for you. That gentleman who got the $1,500 a month because his wife's long-term care policy was $1,000. He called one of those 800 numbers because of a mustache that he saw on TV. And you know who that was, right? Absolutely. And so they were going to give him $200,000. And he was perfectly happy with that. And his son goes, no, call Angela. I need to make sure that this is the best deal for you. So he was perfectly happy with the $200,000 and I wasn't going to convince him any differently. Right. And I said, you know what? I can do the same loan. I'll make more money. But that's not the best way to help you. He was all like, I go, what is your plan for that money? So he said he was going to take $30,000 and fix the roof, do some upgrades inside, and then he was going to put the rest in his savings account and withdraw $1,000 a month for his wife's long-term care policy. Well, I was able to turn that $200,000 that he was perfectly happy with taking. By age 100, he will have received $478,000.
Wow.
So it's all about structure. Now, yes, I made less money and I'm okay with that because he's going to be able to use that money for a lot longer in his life. Right. So just know that my motivations are definitely to, help make the best of the equity in your home so that you can live there for as long as you live there.
Well, it's been a real pleasure and I learned a lot. I hope that everyone else watching did too. And like I said, for this month, you guys, we're going to be going over senior stuff. We've got a lot of exciting things coming up. We're going to be looking at a couple of the senior communities in town. We're going to be looking at different types of senior housing, because there's a lot of 55 plus communities, from ones that you buy and live in, like Leisure Village, Winnie Bay, to full care and all the levels in between. So we're breaking that all down for everyone and a whole bunch of other stuff. And if that's not for you, that's okay. Check back next month. We're going to have a new subject every month. So that's it for now. And Angela, thanks so much for coming by.
Thanks for having me, Brian. Take care.
Talk to you soon.